Our closing bell exchange today has Steve Grasso from Stuart Frankel. Rick Santelli's at the CME. We have another guest en route any moment. Rick, I'm going to start with you. These comments from the president in terms of interest rates. What do you make of it? Do you think Chairman Powell will listen to it in any way, shape or form?
No, I really don't. And I don't suspect that the president's going to make it an actionable opinion, meaning trying to get Jay Powell to implement the notion that he doesn't want him to raise rates. I think the president, like on many issues, talks to the public in a much different way than other presidents have in the past. And I know that makes some people crazy, but it's a position he's held for a long time. Even as a developer, he doesn't like high interest rates. I get it. But in this case, he really needs to consider all the moving parts here. He talked about Europe at great length, and he should, but not necessarily about the currency, although that's an issue. It's much of the policy in Europe, much of the policy in Japan with respect to manipulating interest rates, and the fact that Jay Powell, continuing what Janet Yellen did to try to unravel it all and get something back to normal. It really is a good thing. Now, granted, we don't want Jay Powell to move rates too quickly. I don't think he will. He really seems to have his pulse not only on the job at hand, but how the markets are reacting and investors are thinking about many of his moves. It's hard to disagree that there are issues, but raising interest rates to grab some insurance, should we, and we will at some point have a recession, I think is a good plan, and I certainly hope that the Fed will stick with it.
I'd like to jump in there. I think, you know, a lot of times I agree with Rick. We're mostly on the same page. On this one, it doesn't really matter whether or not the chairman is going to listen to the president. He heard the president, and when he was appointed to that role, he knew where the president was on rates. So I do think that whether or not he does it overtly, he has listened to the president. I do believe that he's going to go with the tact of being a little more dovish. We've heard that in the last couple of days. Now, whether it was a reaction to knowing what the president wants or not doesn't really matter to me. I think that he is going to err on the side of being dovish.
We're going to continue to debate this. We've got a former Fed president. Steve Leisman's going to join us. But let's talk about this market today. And also joining us is Chris Cordaro, RegentAtlantic CIO, to talk about what stands out here. It looks like markets are taking a breather. There is the president's comments, but we're also knee-deep in earnings season, as Bob mentioned.
Sure, yeah, and I think the trade war and interest rates are what keeps looming on this, and certainly you've got to be concerned about the dollar, because as the dollar strengthens, any bit of tariffs are completely overwhelmed by the amount of the strengthening dollar. So it's going to have little impact.
Is that why the small caps are outperforming today, and is that where you go?
Sure. Yeah, that's where you go, because you want more domestic trade than foreign trade, and to not influence your overall portfolio. I think the other where you go is you go to cheap stocks. You go to stocks that are selling at real bargains, and that's going to have a better impact on your portfolio.
Like what? What's the bargain?
I think Ford's selling it at an amazing bargain. You know, the Ford's selling it at 5 PE. It's got a tremendous dividend yield. I think that fears of a trade war have been overblown on Ford, or at least that's a great place to hang out and earn some real earnings while you're waiting for this to blow over.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.